This is The Markets. I'm Chris Hussey, and today is Thursday, June 25th, and I'm here on the Goldman Sachs trading floor with John Flood, who is head of Americas Equities Sales Trading within Global Banking and Markets. Floody, thanks for joining us.
Thank you for having me.
All right. I want to get into a whole lot of different things that I know are top of mind for you, but first I want to talk about the markets this week because they've started to get volatile again. What do you make of it? Is the tech trade starting to show some cracks, or is this a time to buy any dips?
I still think that we're in buy dip mode. Reminder that we're stepping into the Russell rebalance tomorrow, which we typically see bouts of volatility heading into. And a week ago from today, as we were just talking about the Knicks parade, which was awesome, go Knicks, we actually had 34 billion shares trade across all U.S. equity exchanges. That's the most active trading session in the history of the stock market. That broke the record made on Liberation Day in 2025. So what that tells me is that you have a lot of investors from all different cohorts, whether it be retail, institutional, corporate, moving portfolios around. So I do think that the volatility will continue, but I do think general trend for this market is higher and dips still present solid buying opportunities.
That's pretty awesome. I didn't appreciate that. 2 million people downtown Manhattan watching the Knicks, and we get the biggest trading day in the history of that.
Correct.
Pretty awesome. Good thing that we no longer have to do the physical trading at the New York Stock Exchange. That would have been difficult. All right, let's get into the supply, because supply is a big factor here. We've got an IPO surge that's taking place here. What does this recent high-profile issuance mean for markets?
Yeah, we saw two high-profile deals in a 2-week period in June. Between the two of them, there was 140 billion notional. It was the first and second largest primary capital raise in the history of the U.S. market in a 2-week period. And the stock market didn't blink. And on our desk, we saw significant institutional demand for these offerings. More importantly, I think that we've talked about the retail bit a lot in our conversations and with clients. Retail has been the most consistent buyer of stocks this year. And as we get through these high-profile IPOs, it feels like it is accelerating the retail bid, which I would expect to continue for the rest of this year.
All right, another theme on the supply side, of course, is the flip side of issuance, and that is buybacks and M&A. You know, strong M&A environment. Buybacks, you're not so sure with the market up so much. Is it enough to offset all the issue?
Bottom line is yes, and that surprises people because we used to talk about buybacks and Mag 7 controlling a bulk of that buyback activity. On our corporate buyback desk, we are seeing a broadening of that bid, which is a positive signal. You know, 2 years ago, an active day on our buyback desk, we would have 10 programs running. This year, it's more like 50 to 60. So throughout the S&P 500, you're seeing, smaller cap companies relative to the S&P 500, relative to Mag 7, also start to partake in these buybacks. And I think that trend continues. And my gut is that this year, despite some Mag 7 names pausing buybacks, we'll have a record repurchase year from notional perspective and from a number of companies that have bought back their own stock.
Yeah, makes sense. Okay, enough on supply, John. Let's go to themes. You are watching a lot of different themes, having to juggle everything. What's got your attention today?
I'm still watching semis and semi-equipment. It's where everyone is and continues to want to be. We've seen a lot of this expressed through exposure in Asia, Korea and Taiwan. I think that, as we said, as you have crowding, as you have popular trades that have worked, you're bound to see volatility, but I think that trend higher will continue. Semis, memory, Asia, and then we have seen supply in Mag 7 as a result of kind of making room for some semis and other places in tech and some other IPO type of transactions. So I actually think that there's some attractive entry points within the Mag 7 complex right now, as you've seen hedge funds short Mag 7 and potentially use it as a source of supply to make room for some of this paper.
Yeah, no, it's a great point. Mag 7 has almost become a top 10. There's three big semi stocks now, over $1 trillion. Okay. Let's put your rates hat on. I know you're an equity specialist here, but another theme that's sort of in the market is the Fed. Warsh had his first Fed chair-led June meeting. What do you make of rates? How is that going to impact equities?
I actually started as a rates trader at Lehman Brothers in 2006, which didn't work out too well for me. So that was a long time ago.
I started at Lehman as well.
So the market right now is concerned that rates will move higher. I just walked back from my desk, and the market's pricing in 40 basis points of hikes between now and year end. And I would say that is the number one concern of what could potentially break this market: higher inflation and higher than expected rates. I thought that the Fed meeting was more hawkish than expected, but I think that we have the best economists on the street. They do not think that we get a hike. And right now, a hold between now and year end will essentially act as a cut. The market will take it as a cut. But I do think that I think we need to continue to follow rates very closely. It is what people are concerned about. I'm on the same page as our economists and think that we don't get a hike, which would be bullish for the stock market.
Yeah, super bullish, I would imagine, if you got 40 basis points of hikes priced in already. All right, let's go to the here and now, because believe it or not, next week we're going to close out the first half, the second quarter, the month of June, everything. Earnings momentum. What are people thinking as we go into earnings season?
Earnings have been the driver of this bull market. And we think earnings will continue to drive the market higher. That really is the linchpin behind our bull thesis. Q1 earnings, the median stock grew earnings at 14%. That was one of the best quarters we've seen in decades. Q2 earnings are around the corner. Median expectations are for 9% year-over-year growth. If we come close to that level and clear that hurdle, which we think we will, the earnings still paint the story of a fundamental backdrop that supports this move higher. So earnings have been fantastic. We think they'll continue to be very good. So let's see what Q2 brings us.
Yeah, it's such a great point. We had one of the best earnings growth quarters. If anybody's looking for why stocks are hitting all-time highs, it's that simple. All right, let's put a bow on it. What's your favorite trade?
My favorite trade right now is to continue to lean into what's working. High momentum is crowded right now. It's crowded for a reason. I think that semis, I think that semi equipment, I think that pockets of Korea and Taiwan continue to work. So I like continuing to lean into trades that have worked between now and year end. And I do think that S&P 500 has a real chance to break above 8,000 in the near term, because we said there's a whole lot of technicals that are a tailwind right now. Most important, earnings have been fantastic, and they should continue to be.
Now, I got to ask, because you mentioned Korea, down 10% in a day once this week. Didn't shake you?
Nope.
I love it. That's the FOGO. Never gets shaken. All right. What are you watching for next week? Because we're going to end it all and we're going to start July.
I don't want to not bring up anything bearish. So next week, as we said, we close out first half of the year. There are some technicals that could act as a near-term market headwind. Pension rebalances. Essentially, pensions need to tweak their portfolios to get the right mix of equities and fixed income. And because equities have outperformed fixed income so much, there's actually 30 billion of U.S. stocks for sale attached to this pension rebalance. We have June 29th, June 30th, the last two trading days of the half next week. That would act as a near-term headwind. So I would not be surprised to see some early market weakness next week that, again, could present a solid buying opportunity.
That is a cool catalyst that not everybody watches. I love that one. All right, last question, because July is going to bring us the World Cup Championship. I know you love every sport there is on the earth. Who are you picking on the World Cup?
USA all the way, baby.
Ah, yeah, why not? 4th of July, too, next week. That does it for this week's episode of The Markets. I'm Chris Hussey. Thanks for listening.
The opinions and views expressed herein are as of the date of publication, subject to change without notice, and may not necessarily reflect the institutional views of Goldman Sachs or its affiliates. The material provided is intended for informational purposes only and does not constitute investment advice, a recommendation from any Goldman Sachs entity to take any particular action, or an offer or solicitation to purchase or sell any securities or financial products. This material may contain forward-looking statements. Past performance is not indicative of future results. Neither Goldman Sachs nor any of its affiliates make any representations or warranties, expressed or implied, as to the accuracy or completeness of the statements or information contained herein, and disclaim any liability whatsoever for reliance on such information for any purpose. Each name of a third-party organization mentioned is the property of the company to which it relates, is used here strictly for informational and identification purposes only, and is not used to imply any ownership or license rights between any such company and Goldman Sachs. A transcript is provided for convenience and may differ from the original video or audio content. Goldman Sachs is not responsible for any errors in the transcript. This material should not be copied, distributed, published, or reproduced in whole or in part, or disclosed by any recipient to any other person without the express written consent of Goldman Sachs. Copyright 2026 Goldman Sachs, all rights reserved.